Did you know that Wall Street used to have a little secret? It's called the January effect, and it's the idea that stocks magically go up in January. First of all, Happy New Year, investors. Perfect timing, because this video is about a behavioral finance effect called the January effect. What if I told you there's a time of year when stocks magically go up? It's not a myth, it's a real phenomenon, and it happens every January. So what is this January effect? It's a historical trend where stock prices tend to rise higher in January compared to other months. Research has shown that it has persisted for decades. For example, one study found that small-cap stocks have outperformed the market by an average of 5% in January over a 30-year period between 1963 and 1993. That's a huge return for just 1 month. Why did this happen? Well, there are a few theories. Some believe it's due to investors selling off stocks in December for tax purposes, creating a dip, and then buying back in January, pushing prices up. Others think it's simply a matter of investor psychology and optimism at the start of a new year. Many investors rebalance their portfolio at the end of the year to maintain their target asset allocations. But don't get too excited. While the January effect was a powerful force a few decades ago, it may not be as reliable today. The market has become more efficient, and many investors are already aware of this anomaly, potentially diminishing its impact. In fact, research shows that in recent years, January hasn't always been the best month for stocks. Sometimes it's been one of the worst. This is a classic example of how cognitive biases, like recency bias and herding, can trick investors. Recency bias makes us overemphasize recent events, so we see a few good Januaries and think the trend will continue. Herding makes us follow the crowd, so if everyone's talking about the January effect, we want to get in on the action too. So don't get fooled by the January effect. Do your research, stay informed, and make smart decisions based on facts, not hype. Subscribe for more financial education videos such as this.